Tricks and tips for swing trading. An easy approach to build your watch list. Swing traders should start working on their watch list during the weekend and keep updating it therefore after once per day. Take a few hours and do some quick research on volatility of all instruments available with your broker. We want to write down somewhere the average daily move. Since this won't change often, you need to select only the instrument with 50 plus on average daily move. Once you're done with that, you can try finding the pairs that are in phase 2 and 3 and work on the plan. But you won't get a lot of trades right away. Like when you start building the watch list on weekend, you can't always have a lot of pairs, especially if you have a lot of phase 1. That's why you're just going to check every time we change to the phase 2 just to add more pairs. To do it once per day is going to be enough, especially for swing trading. Early entry points. We have the option to enter a setup right away for all setups, but this can only work for S1 and S3 setups. S1 early entry. Over 95% of the time, an RSI breakout, that optional confirmation for S1, will happen before a price breakout. Once that is confirmed, feel free to enter a trade. S3 early entry. Try searching for reversal formations like double top and bottom and wedge during the time period of S3. Once found, look to enter a trade at the time of the formation breakout point. So, if we look at this chart right now, what we can see is that RSI breakout happened around 5 candles before the price breakout. So you are saving a lot on your risk reward. You are always going to improve it at least by some amount. At least, let's say in this case, since we know we are targeting 1 to 2, 1 to 3, in this case, you would probably get 1 to 3 and 1 to 4. Early exits. There are a few ways to determine when to cut a position early, and for now, we are going to focus only on 2 ways that don't require much effort. First, EMA. Wait for the first test of the 13 EMA. After that occurs, we are going to watch for the close of the candle above or below the EMA for an exit of a trade. For long trades, we wait for the price to close below the 13 EMA, while for short trades, we look for a close above the EMA. Work on S1, S2, and S3. Second, average daily move. Use the power of the average daily move to determine how long should you hold a trade. If you have a target set to 120 pips and your average daily move is 50, you shouldn't hold the position for more than 3 to 4 days. So if we look here, we have the first test of the 13 EMA, and from that point you're starting to watch. Then the first close above the EMA would be a sign that you can close the trade early. Or at least, if you don't want to close the trade, move the stop loss to break even. Understand when to skip a trade. There are not many reasons if everything is aligned to skip a good setup, but overall you should pay attention to trading in some scenarios. Trading during any high-impact news events can be hard even for professional traders. Try skipping placing any new trades at least 15 minutes prior and after such releases. And the second part would be to try skipping opening any new position after middle of New York session on Fridays. Most times you will get same chance on Monday without any additional stress over the weekend news headline. I really want you to skip trading on Fridays. At least I don't want you to close the trades on Friday, but I don't want you to start adding new setups during the late US session on Friday. So after middle of that New York session, if you want, you can say like after the first 4 hours of the New York session, I don't want to trade anymore. It's because, first of all, during the first few hours of the New York session, we are usually going to get the best momentum. And if you didn't enter a trade, then there is a small chance that you are going to enter a trade at that late stage. And then you're risking the part that something bad is going to happen. And when market opens on Monday, you see a strong gap against you. So I don't want to add new positions. It doesn't mean you're not going to hold a position over weekend. It's fine. But that should be a position that really was opened earlier. Your perfect risk setup. You're not going to get a lot of trades daily as a swing trader, so our risk profile will be a little bit higher than normal. If you have a smaller account, just double the numbers. Risk profile for the first 90 days. We're going to go with the risk per trade being 1%, risk per day 3%, risk per week 5%, and risk per month 10%. Now, after that 3 months period, I want us to use a little bit higher risk profile. We're going to go with the risk per trade being 2%, risk per day 6%, risk per week 10%, and risk per month 15%. So overall, we are not going to risk too much more per month, but I want us to start increasing that trade size, especially since we are not going to get like 5-10 setups every single day like we are going to get in a day trading. So we want to increase our risk per trade basically. Best time frames for swing trading. From our testing of the ND10X system in the last year, the best results have been seen on H1 and H4 timeframes for swing trading. You can use a combination of 2 timeframes for each setup. Have opened the H1 and H4 timeframe of the pair you want to trade. Just remember that trading the higher timeframe should be your primary plan, while using the smaller timeframe as a backup during the slow days. So what it means is that if you decide to go with that route, you should primarily focus on that 4-hour as your ideal time frame and use the H1 if you don't find the setup that often on the H4. Also, what you can use when you have like 2 counts, you can use slightly different risk profile. For example, go with half of risk for the smaller time frame. Small tips to success as swing trader. Swing setups won't open right away. So try setting everything out with our tools and then move on to the next setup. Let the algos work for you. Like we said, first of all, you're trading the 4-hour or just the 1-hour time frame. Doesn't really matter. But you are going to wait minimum few hours to get into a trade. And if you are there in front of your screen watching when you're going to get into that trade, it's going to become boring. So I don't want you to focus on that part of trading after you click that quick long, quick short setup is there. Algo's job is to work for you. Limit your searching for the setups to 2 to 3 hours per day. You can then use the phone notification to assist you further after you have done so. Like we said, you're not going to get crazy amount of the alerts, but you're still going to get a decent amount. So you can simply work your plan, spend a little bit of time in front of your screen waiting and seeing if you miss something. But after 2 to 3 hours, you can even limit yourself if you want to 1 hour. But I suggest 2 to 3 just to make sure that you are going to pay attention on that small details. And after that, just use the phone. You're going to get a notification every time we get a new setup. So after that, come to your PC, check the setup and move on. But you don't need to be there all day long. Try to have a maximum of 5 open positions at any given time. Our goal as a swing trader is to build some sort of a portfolio that will work always. So I always like to have like 5 open trades on my book. First of all, when we move the risk after 90 days to 2%, the 5 trades would give us a 10% risk. And that can be high sometimes. So you don't want to overexpose yourself. I think 5 open trades will be more than enough, and it's something that you can easily get with our system. Now, on the other hand, every time when you make money, you are going to make a decent profit, since on average, you are going to make between 4 and 5% on each trade. And I really like this idea. That's why I would still have 5 open trades, but no more than that. Don't hold more than 2 instruments from the same currency group. For example, if you hold dollar yen long and euro yen long, don't try adding more yen pairs. Move the stops to break even prior to strong economic data, or otherwise be in front of your PC during that time to monitor trades. How much we know that most news won't affect our swing trading. I want to be alerted on the news like non-farm payroll, like interest rates. I want to be there because I know that those kinds of the news can really move the market. So if you don't want to watch the news, just move the stops to the break even. Or if you don't want to do that, you are going to be there, watch the trade, since most of the time you are going to have much more time reacting on the news if you are swing trading compared if you are day trading. Like from 10 trades, maybe 1 will hit the stop loss, all others you can still close in the profit if something bad happens.